Hello Internet, welcome to Making Money. My name's Eric and this is your Daily Dollar, our financial segment where I give you one lesson every day to help with your finances. We're talking about investing. I feel like I'm saying that in every episode nowadays, but it's true. We're still talking about investing. We've recently been talking about some things that you should know when you first get into investing, some kind of base knowledge stuff to help you, understand the road ahead. And today we are talking about leverage, specifically leveraged investing. So what is leveraged investing? Leverage is basically when you borrow money, say from a broker, and use that money to invest. So you'll have a base amount in your account, but you can borrow more money and invest with that. Obviously, this allows you to have more potential gain, but it also has the risk of more potential loss. In fact, you could potentially lose more than is in your base account, meaning you would go into debt. So this is a very dangerous thing. It can also be a very profitable thing, but it's something you really need to know and understand before you start diving into it. So as a random guy on the internet, I would suggest taking a step back from leverage and learning about it, but don't be too quick to dive in. It can be difficult to understand and it can really turn on you quickly. So even if you really know what you're doing, be careful. But when we get into investing, the ways that people run into leverage, I find that there's actually two ways that are most common that investors kind of get introduced to leverage investing. The first is options. If you're not familiar with options trading is contracts that you can buy and sell, basically. And there's a contract writer, and you can either do calls or puts, and calls basically allow the buyer to say, okay, I am going to, I agree that I will buy these stocks at this price at this date. And a put is I agree to sell these stocks at this price at this date. Obviously, we are speculating about the future here because the market will go up and down between now and that closing date. The price of the option will go up and down, and that's where the money comes in. Options are leveraged because contracts normally say something along the lines of 100 or multiples of 100 stocks. So I agree to sell 100 stocks at this price at this date. This does give you kind of a first step into leverage. There are cheaper options that you can buy and sell and write and all that fun stuff that allow you to try it out a little bit without, really diving too deep into it. But you always got to watch out. You really, really got to understand because they are a bit complex, you could be taken by surprise. And obviously nobody wants that. So options are something that I know are probably very interesting to a lot of people. They draw in a lot of investors just because they do have a lot of potential gains to them. And they do come off as kind of a quick win thing. And remember, there really is no quick win. We got to take the time to understand it before we do it. But yeah, so if you are interested in options, awesome. Do your research first. Definitely dive in and understand. And then again, start off small. The other type of leverage a lot of people will get introduced to is something called margin investing. And basically what margin investing is that you have a set amount in your account and the broker will say, okay, I will give you X amount of money as long as you keep that money in your account. All right, so you're basically borrowing on margin. So you have your minimum margin that you keep in that account and you can borrow above and beyond that and invest that. And as long as you're making profits, all happy and well and dandy and it's great. If you lose money and fall below a certain point, you will have a margin call. The broker will call you basically. And I don't mean like call you, I mean like margin call. It's anyways, they will execute a margin call, and you will have to pay back what you owe plus interest. So this can be a very dangerous thing. Yes, it's great because it does allow you, again, leverage on the stocks that you're buying, but this can also result in you losing more than you potentially have to lose. There's a lot of horror stories out there of people borrowing on leverage and losing much more. There's people that you hear, actually semi-recent news, past few years, that were able to get more leverage than they should have and ended up in extreme amounts of debt. I mean, like millions of dollars. So this is something that you should be very wary of. For beginners, I definitely think that margin trading is something that you should, aim to understand, but aim to stay away from until later on. But again, that's just me, some guy on the internet. Watch out, kids. Don't get burned. But that's all I want to talk about today. So leveraged investing. Be wary, but definitely a part of the market that you should understand. And as always, I hope you guys are enjoying this series. I'm enjoying doing these. It's been a lot of fun. Have you ever borrowed on margin before? Have you ever done options trading? Feel free to leave that in the comments below. How'd it work out for you? Be interested to hear. As always, you can hit me up on Twitter, link in the description, and I will see you guys tomorrow for another lesson. All right, guys. See ya.